Pause, we continue with a Fireside Chat hosting Mika Sigal, a globally known venture capitalist. He is answering questions on the status of venture capital investments in Fintech. Richie Santos Diaz from the Fintech Times is asking the questions. Please note of a country presentation on Kazakhstan by Yerkegali Yedembaye from Astana International Finance Center. It is in Kakun now, and the stage is yours. Welcome. Mike Sigal and Richie Santos Diaz.
Hi, everybody.
Woo! We all happy? We all excited?
You guys still alive? It's day two. We're towards the end. Are you? Come on.
Yes!
So, I'm looking forward to having this fireside chat with you today, Mike. So, Mike Siegel, for those in the audience, by the way, I don't know what you've done so far. I don't know if you've met interesting people, interesting banks, interesting partners, interesting fintechs, or more importantly, finding money, finding capital, right? So today's chat, venture capital in fintech, I'm looking forward to having this chat with you, Mike Siegel.
I'm looking forward to it as well.
Thank you. So Mike, can you give the audience here a bit of information about yourself? You have a very impressive career that spans many years in startups, in venture capital, and what you're doing at the moment. Just enlighten us.
Yeah, absolutely. So first of all, I'm really grateful to be back here in Istanbul. My last time was in 2015 at the very first Istanbul FinTech conference. So thank you, team, for inviting me back. So I'm a 7-time entrepreneur, 8 if you count a not-for-profit in the payment space that I did. Had a few exits, had a few failures, went through an IPO. Starting in 2011, I went to work helping SWIFT, the global payment network, try and figure out how to interact with these weird things called startups. That was sort of before the word fintech existed. Inspired me to begin working on what would have been my 8th commercial startup in the fintech space. Didn't move forward with that, but ended up becoming a VC focused on fintech for a company called 500 Startups, where we did 88 investments in 28 months in 26 countries. And in that portfolio today, we have 3 unicorns, about 5, we call them Soonicorns, so we invested early. But I realized I don't like being a VC, not because I don't like working with startups or even mind fundraising, but I hate the administration. So today, I spend my time as an advisor to founders, to corporations, primarily banks, on their investment and entrepreneur engagement programs, and a few other venture funds focused in fintech.
Excellent, thanks for that. And many of us probably know or don't, for those that are trying to understand just the wider VC funding landscape the last, let's say, 5 years. I mean, Mike, can you just elaborate in terms of the highs and maybe not so highs with regards to VC funding globally in the last 5 years, and maybe something specific if you wanted to enlighten us?
Yeah, so maybe some longer context than that. Folks often think that fintech sort of, as I just said, started in the 2010-ish timeframe or 2008, but dial back to the beginnings of PayPal, where we realized we had to change the way financial services worked to support the way consumers were working with this new thing called the internet. And so that's kind of where it got started, if you will. Dial forward to 2008, which what you had happening was the global financial crisis basically destroyed all trust in financial institutions. And as consumers, we began to center our lives around these things, and financial services really weren't working too well there. And then you had Bitcoin, which I don't want you to think about cryptocurrency. I want you to think about the fact that millions of developers and entrepreneurs looked at Bitcoin and said, I wonder if I can disrupt that absolutely atrocious, untrustworthy financial services industry. Let's start working on fintech. And so that was sort of the beginning of the last go-round, if you will, which was then later fueled by the fact that not a lot of people know this, but the entire venture capital industry, your ability to make money in it, is controlled by the US Fed, right? Because if there aren't low interest rates such that money goes into public markets, whether you're in the US or not, you can't get exits. So we saw this enormous growth happen in fintech, where today, there's still more fintech unicorns than pretty much any other market segment. If you look at some of the success stories, you see large percentages of consumers use fintech solutions. So, for example, Nubank in Brazil is now the number 4 bank with 92 million consumer accounts and is just flying past all the big ones. So that's sort of the broad context.
Okay.
If you want to look at, we saw this huge dip as a result of interest rates.
Yeah.
But you see that fintech is already beginning, the investment is beginning to come back, and there's a bunch of reasons that we can go into that and what the investment is going into.
Yeah, do you mind elaborating a bit on what those potential, for example, I follow the space, so I was the one that brought the FinTech Times to the Middle East and Africa. So Middle East and Africa for me is really interest. And although VC funding globally has gone down, especially in pretty much tech as a whole, you saw some positives. So like in Saudi Arabia and the Francophone Africas, where actually they took a slight more than what they would normally take in the past.
Yeah.
I mean, can you elaborate on an example of where it's going to in terms of funding as a whole?
Well, geographically, it's on the rise everywhere. I think the number one destination in emerging markets for fintech funding right now is actually Latin America.
Yeah.
But there's plenty.
It's not Fisanhani?
No. No. And we can talk about Turkey as much as I know about the market in a minute. But when I started my fund, our marketing language was financial services for the rest of us. And the thesis was that given how many billions of people were going to have these devices over the next 10 years, and that the cost basis of traditional financial services was too high to deliver to low-value customers here, that was what we began investing into. If you look at Saudi Arabia, I got a call from the Private Equity and Venture Capitals Association of Saudi Arabia to teach their VCs how to be better fintech VCs, because out of 3 unicorns in Saudi Arabia, 2 are fintech.
Yeah.
Right? And you've seen a couple of unicorns come out of Africa. You're seeing plenty of unicorns beginning to come out of South America, of Southeast Asia. So, the global South, if you will, is barren of good financial services generally.
Yeah, I mean, look, Turkey, right? Since from 2020 to now, they produced 7, which before you had none. So that's really impressive in terms of what has been happening globally in different parts of the world.
Yeah, but they're also not fintech unicorns here, which is...
There was one last year, yeah.
Oh,
yeah. That was a new one, yeah.
Which I'm still trying to understand the why of that.
Yeah.
But, you would think a country of 84 million plus people would be able to generate more, right? Even if they were only indigenous.
Yeah.
So, yeah. But there's a much sort of bigger shift and sort of why I think it's a great time to be in fintech, which is if you look over the last phase, the stuff that was done, right, beyond payments, right? There's still lots of innovation to do in payments, but it was really the easy stuff for the low-value customers, retail, small business, neo-banking, payments, lending, these kinds of things. And that seems to be fairly well trafficked both by way of fintech and by the way of traditional financial services firms, like coming up the customer service curve fast, right? And the customer satisfaction in banking, for example, in Turkey, shows that, right, versus many other places. But what's going to be happening over the next 10 years is the hard stuff, with the very high, let's call it AUM and revenue per customer. That's what we're getting into now. Things like corporate banking, capital markets, asset management, all the really difficult things that are super high value. My colleagues in venture capital, that's what they're looking at and saying, look, there is a $2.3 trillion a year profit pool in the most profitable industry on the planet, and we're going to fund entrepreneurs to go take that away from traditional financial institutions.
Do you see, I mean, in terms of subsectors, because you were mentioning payments, so beyond that, like, do you have any idea, or like kind of predicting which ones you think will be? Because, like, for example, you know, in Middle East and Africa, you know, lending, wealth tech, investing. So, any other subsectors?
So, yes. And implicit in your question is, right, with asking about Africa, is different markets have different levels of maturity of both infrastructure, regulatory frameworks, and consumers or businesses that can adopt this stuff. And so you get differentiation depending on those conditions.
Okay.
That said, in the big picture, there's a bunch of things that haven't, right, in those big complex areas that haven't been solved yet. So one of them is payments. And what I mean about that is that because you've got now, you know, MasterCard and Visa, ACH, cross-border, all of these different payment rails, which used to have specific niches that they worked in, the functionality of them are all converging. And so I can use a card payment to make a corporate payment or this kind of thing. And what I believe is happening is you're going to see the value of clearing and settling a payment go to zero, right? Basically killing the revenue streams of a lot of traditional payment providers. So where does that revenue come from? What does it do? If you're thinking about corporations, moving the payment isn't the hard part. Reconciling the payment to the operating systems of the company, that's the hard part. And when you add data, a data layer to the payment, then you can automate reconciliation. And so that whole payment chain, what do you do when payments cost nothing to move around, but in order to take advantage of payments that have nothing, you need integration to operating systems? That's a really huge opportunity in my mind. That's one. The second one is, if you think about it, between financial and real-world assets, there's probably about 475 trillion of them floating around the planet today, and the vast majority of them are still managed on paper or PDFs or something like that. So there's an enormous, whether you want to call it tokenization, whether you blockchain, not blockchain, doesn't matter, there's an enormous amount of automation to add to managing, subdividing, et cetera, those financial and non-financial assets.
Okay.
And all of the infrastructure on the planet for that stuff ultimately has to be replaced. Huge. Another one, banks still suck at the lending that their regulators don't put them in the business to handle. So asset-based financing and other, you know, sort of specific micro segments of lending where you need specialized knowledge and you need regulators who let you have a capital stack that supports the fact that those are really differentiated products. So I think that's another big one.
Okay.
And insurance, right? Insurance is an absolutely enormous industry globally. By comparison, today, about 2% of all financial services market cap globally is Fintech. So about 245 billion of 12.5 trillion. And we know that an enormous amount of venture capital, more than any other segment up until AI, right, went into banking side of that. On the other hand, insurance is about 0.03% insurtech, so tiny, 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 tiny.
Yeah.
Yet the amount of venture capital that's gone into insurance is about the same fraction, right? So there's a lot of space for innovation in insurance.
And just for the sake of time, can you just leave the audience here? Because quite a few are startups. Some are trying to raise funds themselves across different spectrums of the levels. Just really quick with your own experience from that side of VC and also just in startups in general. Just a quick piece of advice before we end today's Fireside Chat.
Yeah, and this is, when I say this, it often pisses off venture capitalists because it sort of rebalances the information scales for the entrepreneurs. And entrepreneurs, I know you're in love with your product, but actually VCs don't care because they're not buying your product, they're buying your equity. And they want to know not just that you can create a great product, but that you have a sense of how you're going to grow a great business. And that's the number one mistake, and it's not just in fintech, it's across all entrepreneurs everywhere in the world. When you make the mistake of believing VC marketing about just build a great product and then we'll find you, no. You have to be able to pitch to them the way that they want to buy, which is, I'm going to invest in your equity and I want a return for that equity. And so it's about your business overall, not just your product.
So that's a good way to end it.
Wait, before you end, so that QR code right there, the lower one, that has my pitch deck on the future of fintech. And so it's there for free. You have to put in your email, but that's got a whole lot of stuff. And at the back of it, I think, is some contact details for me.
So
now you can end.
Okay, so my final pitch to you guys is there's interesting sessions at the end of day 2, marketing. Thank you so much, Mike. Thank you so much, everybody, for staying and tuning in.
Thank you.
Thank you.
Thank you, Mike Siegel and Richard Santos.